Pricing is more than just a number. It's a reflection of your value as a professional. For accountants, charging the right price can be the difference between simply getting by and building a sustainable, profitable business. Understanding your worth, setting fair rates, and confidently communicating them to clients allows you to grow without burning out. In this post, we'll explore how to assess your value, structure your pricing, and present your rates with confidence, so your services are aligned with the expertise and impact you deliver. Pricing isn't just about numbers, it's about aligning your fees with the value you deliver. In accounting, choosing the right pricing model can determine whether you're simply trading time for money or building a more profitable and sustainable practice. Hourly pricing is one of the most traditional models. With this approach, you charge a fixed rate for the time spent on specific tasks. It's simple, transparent, and easy for clients to understand, which makes it ideal for clearly defined services like bookkeeping, payroll, or financial statement preparation. Clients often feel comfortable knowing exactly how their money is being spent, which helps build trust. The downside is that your income is directly tied to the number of hours you work. As you become more skilled and efficient, you may actually earn less, even though the value you provide increases. Value-based pricing shifts the focus from time to results. Instead of charging by the hour, you set fees based on the outcomes and impact of your work. If your services help a client save money, improve cash flow, or make better financial decisions, your pricing reflects that value. This model requires a deeper understanding of your client's goals and challenges, but it often leads to higher profitability and stronger, longer-term client relationships. Choosing the right pricing model depends on your services and your clients. Value-based pricing works well for advisory services like tax planning, financial strategy, or business optimization, where results matter more than time spent. Hourly pricing, on the other hand, may suit clients who want predictable costs or have simpler, routine needs. Many accountants find success with a hybrid approach. Routine and compliance work can be billed hourly, while higher-level consulting and advisory services are priced based on value. This balanced strategy allows you to stay competitive, meet different client expectations, and ensure your fees reflect both the effort and the impact of your expertise. Effectively communicating your value starts with understanding your client's priorities. Before discussing fees, take time to learn what matters most to them. Whether their focus is reducing taxes, improving profitability, or staying compliant, aligning your services with their goals allows you to frame your work in terms of meaningful results. Highlighting your expertise through real examples strengthens your message. Sharing case studies, testimonials, or specific outcomes shows how your services have solved problems or delivered measurable benefits. This kind of proof builds credibility and helps clients clearly see the return on their investment. Clear and transparent pricing is equally important. Explain your fees in simple, straightforward language and outline exactly what each service includes. Avoid unnecessary jargon and focus on how your services directly benefit the client, making your pricing easier to understand and accept. Finally, build trust through consistent communication. Regular check-ins and updates keep clients informed and reinforce your ongoing value. When clients see that you are proactive and invested in their success, they are more comfortable with your pricing and more open to long-term engagement. When clients raise concerns about pricing, it's an opportunity to reinforce trust and clearly demonstrate the value of your accounting services. Handling fee objections professionally requires confidence, patience, and thoughtful communication. The first step is to stay calm and approach the conversation with an open mindset. By understanding the client's concerns, you can respond in a way that strengthens the relationship rather than creating tension. Start by listening carefully. Allow clients to fully explain their concerns without interruption. This shows respect and helps you understand whether the issue is budget-related, based on expectations, or simply a need for more clarity. Next, explain the value behind your fees. Clearly connect your pricing to the outcomes your services deliver, such as saving money, preventing costly errors, improving financial clarity, or supporting long-term goals. When clients understand the results they're paying for, pricing becomes easier to justify. When appropriate, offer flexible solutions without devaluing your work. Options like phased payments, bundled services, or adjusted service scopes can address budget concerns while maintaining the integrity of your pricing. Above all, stay confident. Avoid apologizing for your rates or offering discounts without a clear reason. Confidence in your expertise and professionalism reassures clients that your services are worth the investment and sets the tone for a respectful, long-term partnership. Raising your rates as an accountant is an important step in ensuring your fees reflect your expertise and the value you deliver. While fee increases can feel sensitive, careful planning and clear communication allow you to adjust pricing without damaging client relationships. Start by preparing your clients in advance. Give notice before any rate changes and explain the reasons behind them, such as increased experience, expanded services, or shifts in market conditions. Transparency helps prevent surprises and maintains trust. When introducing higher rates, focus on the added value you provide. Highlight improvements in your services, deeper expertise, or additional support clients receive. Connecting pricing to outcomes and benefits helps clients understand why the increase is justified. Consider implementing gradual or tiered pricing adjustments instead of a sudden increase. Phased changes or service-level tiers reduce resistance and make it easier for clients to adapt while bringing your fees closer to your true market value. Finally, maintain open communication and monitor client feedback after the increase. Checking in shows professionalism, addresses concerns early, and reinforces the value of your services. With the right approach, you can raise your rates confidently while preserving strong, long-term client relationships. Thanks for watching. If this video helped you understand accounting a little better, don't forget to like, subscribe, and turn on notifications for more accounting tips and guides. See you in the next video.